The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
At 10:09, good morning. Welcome to the Accunet Mortgage and Realty Show. I'm Scott Warris, sitting in for Steve Kettlar, and, of course, joined by Accunet Mortgage and Accunet Realty Advisors owner Brian Wickert and Chief Millennial Loan Consultant David Wickert. If you have a question or comment, your calls, your texts, they're all welcome on the Accunet Mortgage Talk and Text line 414-799-1620. We will monitor that throughout the hour. I turn to Brian and David. Good morning, guys.
Good morning, Scott, and welcome to our show and your first appearance on it. We're excited to have you as our team member this morning. Hey, we're going to want to start out talking again about the massive Equifax data breach that occurred. Well, it actually occurred from March through the end of July, but
a long time ago.
Told the world about it. Yeah. People, it's kind of bad. No, it's really bad. Yeah. But they told the world about it on September 7th. That's a little more than 2 weeks ago. On the 8th, I went online and figured out that my wife Becky and I were both part of the 143 million Americans, which, by the way, is like 47% of adults had their data breached. And we're not talking about, just like your eye color. They got our social security numbers, our birth dates, and our addresses. Those are the three things you need to apply for a mortgage, a credit card, a car loan. They got the keys to your front door. And so I wrote a blog post on the 13th about what I did to protect our credit identities. That went up on about the 13th of September. And then that got picked up by JS Online. Paul Gores wrote a great article that appeared both in the paper version of the Milwaukee Journal-Sentinel, which, by the way, is astonishingly thin. I was shocked when I picked that up. But and then also on JS Online, we've been getting a ton of thank yous and positive feedback on that because I just lay out in that blog what I did. So here's just a quick recap of things you could do. Thing number one, you could do nothing. And believe it or not, I think that is the most popular option. People are just paralyzed because they don't know what to do. They know it's going to be a hassle. So a lot of people that I talk to are like, no, I haven't done anything. I know I should.
Can I fess up?
Yeah.
I haven't. I haven't checked. I mean,
see?
I know.
I didn't do anything until this morning, too.
Okay, so you are part of that group. And let me ask you, live on the radio.
Please.
Why?
Part of it is you get busy, the day goes on. I realize how big a problem it poses me, and yet it's just finding that time. I guess maybe it's how long will it take? Is it easy to follow? Is it too complicated? All those factors go through my mind.
It is all of those bad things. It is complicated. It is a hassle, and it does take time. And let me say it this way. If I told you that somebody stole the keys to your home or apartment and they made a lot of copies of it and they're giving them to crooks all over town, you would probably do something about it.
I probably wouldn't put it off. You're right.
You probably wouldn't put it off, but I'm just saying you're normal and you're forgiven. My son here, mortgage professional, chief millennial loan consultant, just did something about it when, Dave?
This morning.
When he came and I said, David, have you done anything about that? Another example of a large group of people who, didn't even know about it are people like my mom, who's 87 years old, and her husband, 88-year-old Dan, who live at Tudor Oaks. When I called them last Sunday, I said, Mom, do you know about this Equifax data breach? And I went over to visit her then before the Packer game, and I did it for them, which was the last thing I wanted to do. And I made them promise that they wouldn't have all their friends at Tudor Oaks call me to have them do it for them, because I won't do it. But it's a hassle. All right. So here's the other thing that you're at risk of. So, Scott, anybody listening today, if you want to know what I did, the four things you could do are nothing. You could then sign up to monitor your credit. That's like a product like LifeLock, which interestingly has the word lock in it, but when you sign up for it, you're really not locking your credit. You're just monitoring it. And that was Mr. David Wickert's excuse. Dad, I'm monitoring my credit on Credit Karma.
It's true.
All right, but here's the real inspiration I want to give you. So we have a coworker at Accunet who, unrelated to this particular data breach, did have her credit identity stolen a year ago. Somebody opened up a credit card in her name, bought a large screen TV, and then never made a payment. So that credit card account went to collection. It's only when that went to collection that she found out about it. She has been dealing with this now for months. And the collection agent, oh, by the way, her credit score is down 94 points because of that one collection.
Wow.
That's not hers, right? But because you didn't dispute the charge within the time frame, now she's got to clean up that mess. So there's my inspiration story for everybody out there, is if you don't do something and somebody creates a mess, it is even a bigger hassle to clear that up. So the other two things you can do are a fraud alert, but what I chose to do was a credit freeze, which prevents any creditor out there from even accessing your credit report. So to me, that was better than a fraud alert. Fraud alert just says, hey, Accunet, when you check Fred's credit, just know that I'm the victim of identity. You got to call me back, to make sure it's really me. So those are the four things you can do. I got two more tips when we come back from this break related to the Equifax situation. Then we'll get on to some other real-life stories from the front lines of real estate when we come back.
Sounds good, Brian. Yeah, it's an issue that hits close to home with me, and I know there's many of you listening right now that it hits close to home too as well. If you want to get in on the conversation, your calls, your texts are welcome on the Accunet Mortgage Talk and Text line at 414-799-1620.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
At 10:18, I'm Scott Warris in for Steve Kettlear. Your questions and comments to get involved on the Accunet Mortgage Talk and Text line 414-799-1620. Brian and David, we were just talking about the Equifax security breach and some of the things that you did, Brian, to see what your situation was, and looked like the credit freeze maybe was the best bet out there for you.
That's what I decided.
Mm-hmm.
That's what I decided. And just by the way, I got an email from a customer because we sent out the blog post, which you can find at Accunet.com. Just scroll down a little bit underneath the rock solid pre-approval. It's the first blog post on the left. Because I just basically gave everybody a recipe card of, here's what I did. I'm not saying you should do this. Maybe you want to do more. Maybe you want to do less. But this is what I did. I've only been slinging loans for 30 years. But I just got an email from Jeff, one of our customers. Thank you so very much for sharing this information with your clients. Getting these notes really made it much easier than trying to surf through all of this by myself. So I've gotten dozens and dozens of these over the past week. All right, but here's something I picked up on the Wall Street Journal, who did a follow-up article on this topic this weekend, and I hadn't thought about it. Hey, if somebody has your Social Security number, your address, and your birth date, David, what else could they do with it?
File a tax return.
Correct. So there's another kind of a fraud you can commit with somebody's credit identity, is you file a tax return with the IRS with numbers that would generate a return, and then you somehow, intercept that by having them put it to a bank account. Oh, wait, that's another thing you could do with somebody's Social Security number, birth date, maybe make up a fake ID. You could go into a bank and create a bank account to which the IRS could send you a refund. So just look out for a wave of tax return fraud. And the only thing that they came up with in the Wall Street Journal article to prevent that was file your tax returns right away before the fraudsters do. Like, really? So I'm hoping maybe the IRS will do something about that. And then the other thing that I discovered, because I called all three of the toll-free numbers. In my blog post, I have the toll-free numbers for each of the credit bureaus. Equifax did answer my phone call with a live human being who didn't know much. He just said, check your spam filter, because I still haven't gotten the email from my mother to finish setting up her protection at Equifax. By the way, you got to do this exercise of freezing at each of the three credit bureaus. There's no one place you can go. You just have to go to each one.
And if you're married, you have to do it for both of them.
Correct. Yep. So that's a hassle that you talked about. But then TransUnion, interestingly, allows you to call a toll-free number and at least attempt to freeze your credit using your touchtone phone. David tried it and didn't succeed, I think, because you haven't been at your address for very long, is my guess.
Yeah.
Experian is not my favorite, as you'll see in the blog. They make you mail in. So if I'm thinking elderly parents right now, If you don't have anybody who is tech savvy that can help you do this stuff online, you cannot get anybody at Experian on the phone. So you would have to mail in your information to request your credit freeze, and that involves like mailing or overnight your social security number, your birth date, some photo ID. I'm like,
Oh, good, because that's secure, just going snail mail.
well, yeah, it's not ideal. All right. When we come back from this break, we're going to talk about some deals that are in process, so purchase transactions, where we have had interesting home inspection issues that have to be dealt with using an amendment to the contract. That's very common. We're going to tell you some of the do's and don'ts on the other side of this break.
I love a good list. Get the pen and paper ready. Do's and don'ts coming up with Brian and David. If you have a question, a comment, the Accunet Mortgage Talk and Text line is waiting for you at 414-799-1620.
Helping you find a place to call home. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And I'm Scott Warris in for Steve Kettler. The Accunet Mortgage Talk and Text line is open at 414-799-1620. And Brian, David, I've got my pen and paper ready for some do's and don'ts. Let's talk home inspections.
Yep. So whenever you buy a house, the typical, like almost everyone says, my offer is subject to me hiring a Wisconsin home inspector, or if you're in Illinois, an Illinois home inspector, to inspect the property. And if there are any defects found in the property, I can either walk away or we'll negotiate them. All right. So we have this transaction that we talked about in last week's show on an FHA loan, which means 3.5% down payment. And we get an amendment. So that's how you take care of problems that are found on the inspection. So the amendment is full of references to the home inspection. Item 5, 6, 7, 8, 12, 10, 13 on the home inspection are going to be fixed by the seller before closing. And on and on and on. And very specific about it. Oh, then the problem is one of them had to do with the foundation. Okay, the guy's foundation, this happens with older homes. The foundation is leaning in. So the don't is do not reference the actual home inspection, right? Instead, so if there are 5 things that need to be done, type those up, real estate agents, on the amendment form, and do not reference them on the numbers listed on the home inspection, because then what you're baiting, you're begging the lender to do is to look at that home inspection. And believe me, lenders do not want to see everything that's in a home inspection, because typically if you find 12 things that are wrong with the house, you might only negotiate to have 6 of them done. Don't make me look at the document that has all 12 problems on them, 6 of which you decided you wanted the seller to fix. The other 6 you didn't. Okay, so the big don't is do not reference the inspection itself in the amendment document. That's going to address it. All right. The other thing is, if it's going to be fixed by the seller, it's got to be fixed before closing. And we told that to this particular home buyer, and his real estate agent said, well, that's crazy. I've got all kinds of lenders who can allow this to be done 6 weeks after closing. We're talking about the foundation repair now. And we said, well, good luck to you. We'll keep your application alive. But, if it pans out that you can't find somebody who's willing to wait, then let us know. Guess what? They called back by about Wednesday and said, we want to proceed with you. What exactly do we have to do to get this?
Miraculously, the foundation guy could get out there faster.
Yeah. Now, miraculously, the guy could get out there faster. And it turned out we caught a huge break. And I did not know this until this last week. The reason why we did not have to have the appraiser look at the inspection that was referenced in the amendment was that the appraisal happened to have gotten done before the amendment was signed. And so I did not know this, but therefore, because of that odd timing, because usually the inspection and the amendment get done first related to the inspection, and then we do the appraisal. But in this unique case, the home appraisal got done first, then the amendment. Therefore, we did not have to have the appraiser address all these issues in the amendment. I learned something new even after 30 years in mortgage lending, so we dodged a bullet. All right, so that's the big don't. The big do is, and we're going to talk about this after the news, we have another case where in point of fact, the buyers wanted to get a new furnace because their inspection showed that this 22-year-old furnace was on its last legs.
This is a different transaction?
Different transaction
Okay.
now. Different. Thank you for pointing that out.
All good.
And the due here is he just asked for a giant closing cost credit of $3,000. And I guess this is a don't. You don't mention anything of the why.
Yeah.
All right? So when you have something that comes up and the parties are not going to fix it before closing, the thing to do is and you're going to fix it with money, it's simple is better. Oh, so that turns it into a do. Simple is better. All you have to do is say, the seller is going to give the buyer a $3,000 credit for closing costs and prepaids. Period. You don't say because of the furnace that is on its last legs. And we see that all the time. We don't want to know. Do you get the idea? Lenders don't want to know about problems that are going to get fixed in other ways. Because if we find out, in writing, then we're going to make you fix it before closing. All right, when we come back, we're going to talk about where rates are. They're still really good. And just maybe one or two more things on this do's and don'ts for inspection-related amendments after the news.
I've got the list going, 414-799-1620. That, of course, the Accunet Mortgage Talk and Text line. If you want to get involved, we will pause at 10:30. Send it over to the Breaking News Center with Belinda Babinick.
Thank you.
Getting you through the home buying process. Welcome back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And we welcome your calls and texts on the Accunet Mortgage Talk and Text line at 414-799-1620. I'm Scott Warris in for Steve Kettlar this morning. As I turn back to Brian and David, we were on to the do's of home inspections, guys.
Right. On the other do is you have to check with your lender when you're writing up an inspection-related amendment.
Because the other way that you can use an amendment is to force a seller. We can play bad cop. If you put into the amendment, like the furnace has to get fixed,
right?
You can put the feet, pun intended, feet to the fire of the seller to get it done, and we're happy to play bad cop.
Prior to closing.
Yeah, prior to closing, we can.
But the best thing to do is when you've got like a messy and lots of things going on, talk with your lender and let's work as a team, agents out there, and make sure we don't do anything that accidentally shoots either party in the foot that wasn't intended. So we had another deal today on the furnace where the closing cost credit being sought from the seller was dangerously close to being more than the closing costs. So the things that closing costs and prepaids are the term of art. So real estate agents who listen to the show, don't forget to include the word prepaids, because that then loops in the ability of the seller to pay for the first year of the homeowner's insurance premium, the home inspection cost, okay, and property tax escrow deposit, which is usually only 1 or 2 months worth of property taxes because we can't count the full amount. We're not going to go into that because it's kind of complicated. And then the cost of the appraisal, the title insurance for the mortgage, all that sort of stuff, which at Accunet is amazingly low, $1,180. And in this particular case, for the first-time home buyer, we're using the awesome WIDA loan product. We were offering them a $500 lender-paid closing cost credit, which we often do. And so we just had to be meticulous in working with the buyer's agent to make sure that we weren't asking for a credit from the seller that was over and above the costs that we had related to the transaction.
I'm going to say it another way. If you ask for a $5,000 credit, but there's only $3,000 in costs, that's $2,000 we can't use. There has to be, with any credit, you have to match it. You have to pair it with a cost.
With an actual cost, right. And it's never effective to use that extra money to pay for a lower interest rate. Yeah, we can use it up, and you'll save $12 a month. But what you really wanted is to bring less money to closing so you would have it to do these minor repairs to the property that we're not talking about. Okay. All right, so that's enough on that topic. Let's talk about rates, David. We heard an ad right before our show started from?
It was like manna from heaven, from the nation's largest online lender, the guys with the rocket. And I'm just going to do a side-by-side. They were quoting a rate of 3.875% on a 30-year fixed with an APR of 4.05. Dad, you want to guess how much that would cost you in closing costs?
See, and by the way, anybody listening or Scott, the gap between the interest rate and the APR gives you a clue as to how much closing costs there are. I'm going to say $3,000.
$4,300.
Okay,
Wow.
Quicken is charging $4,300, and we backed into that number by calculating
just trying to
the
get to
spread.
the same APR as
Right.
they have.
And so what would our closing costs be, David, for a 3.875 30-year fixed rate as of the close of business on Friday?
$700. APR is 3.913.
Okay.
It's literally the same mortgage.
Okay. Yeah. So there you go. Like I say in all my ads, our closing costs are literally $1,000 to $3,000, or actually I could say $4,300. That's just stretching the believability. So that's why I only go up to $3,000, but it's really $4,000.
Yeah.
On this particular loan. All right, what else? So we got that. What about a no loan cost?
3.99. APR is the same, zero closing costs. I was making some outbound calls this week for past customers because rates have come down a little bit. And when I pick up the phone, it'd be like, I can drop your rate 0.5% with no cost. I got the question twice. Why wouldn't I do this? And my answer is, I don't have a good reason. You should do this. It's literally no cost.
No money. And we always give people the option to pay closing costs if they want to. So we'll lay out the $399 with no loan costs. We've got to be careful to say no loan costs because technically the interest that you pay at closing in lieu of your next mortgage payment is a closing cost, even though it's in lieu of your next mortgage payment. Yes. But we're talking about the economic friction of getting the new loan done. And by the way, Scott, we do this when somebody buys a house too. We always give them choices. Do you want to have a lower rate with higher closing costs? Do you want to have kind of the medium rate with our Accunet's typically low, $1,180 of loan costs? Or do you want this other option over here where we'll pick up the cost of actually getting the loan? That's the appraisal, the title, the closing, the credit report, in exchange for just a slightly higher rate.
Giving people,
the other thing that
Brian, if I could just say, giving people those options up front, I mean, that's got to be pretty heartening as a client, as a customer, knowing you've got their back. Here are your options. Here are all the options on the table. What is best for you?
And the other thing that we love to do is show those people those options side by side on screen. So we use a service that they used to advertise a lot on the NFL games called GoToMeeting, whereby the consumer can look at our loan consultant's computer screen and go through the numbers, not just talking about them or having a chicken scratch them down, but actually seeing them on screen side by side, customized. What if I take $2,000 cash out? Or what if I don't? What if I want to bring the money? What impact does that have on the payment? So we're kind of the kings of transparency at Accunet and really helping people make a smart decision. When we come back from this break, though, I want to talk about, because rates are low. And so Dave was just saying another service we provide is if we notice we can save somebody money, we're going to call them up. And a lot of people want to pay off their loan faster. So we're going to take a look at, hey, what are the numbers and what are the things to consider relative to taking a 30-year versus, let's say, a 20-year versus a 15-year when we come back.
I can't tell you how important that is just as a client, as a customer, as a consumer to know and you've got our back and you have that information up front. That goes a long way. If you have a question or comment, give us a call, give us a text. Accunet Mortgage Talk and Text line 414-799-1620. It's the Accunet Mortgage and Realty Show on WTMJ.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
At 10:45, I'm Scott Warris in for Steve Kettlar. As you heard the big voice say, Brian is here, David Wickert is here. You can be here on the Accunet Mortgage Talk and Text line 414-799-1620. And guys, we have a text that just came in during that commercial break. This one's from the 262. As a first-time buyer, what happens if a house does not appraise for the sale price?
Ooh, a good question. So the answer is a lawyerly one. It depends. A mortgage lender can only lend on the lesser of either the price you agree to purchase the home or the appraised value. So the way that it works out sometimes, let's pretend you have a house under contract for $200,000. If the appraisal gets done and it comes in at a value of $220,000, huzzah, you just got a house $20,000 under its actual market value. Everything's good.
But we can only lend on the
$200,000
lesser of.
Correct, but it's kind of instant equity.
Mm-hmm.
The reverse of that, though, is if you have that house under contract for $200,000 and it appraises at $190,000, there's a $10,000 gap there. I can only lend on the lesser of. So in that example, the $190,000. So most likely your real estate agent wrote in an appraisal contingency to protect you, A, and B, at least offer the possibility of, hey, let's negotiate over this between buyer and seller.
And let's be clear, if the real estate agent just checks the standard box, because the Wisconsin offer to purchase form is a 11-page form, and a lot of things are fill in the blank and check the box, what you have the right to do, if the appraisal contingency box is checked, you as a buyer can cancel the transaction. But chances are
you want the house still.
You still want the house.
Yeah.
And so what happened, now remember, that is on a timer. So a typical timer for an appraisal contingency is 30 days. So when we're getting appraisal done really fast, which is great. So let's say we get the appraisal back on the 20th day. Well, now you have 10 more days, but during which time you either have to cancel the transaction or you propose an amendment to the seller that says, hey, you know what? Well, we propose you lower the price down to the appraisal. Maybe they say no. Well, maybe you meet them halfway. Well, if you meet them halfway, that means you're going to have to bring more money to closing, right? Because good old Accunet can only lend off of the $190,000 purchase price in David's example. And so if you agree in the middle at $195,000, you as the buyer have to come up with that extra $5,000. By the way, what we're talking about applies to first-time home buyers, second-time home buyers, 20th-time home buyers. Yep. It's not unique to first-time buyers, except that many first-time buyers are short on money, right? They're kind of putting it all down. If in a lot of cases, let's say you're going to put 5% down, well, on a first-time home buyer, we can lend up to 97% of the value as long as you qualify. The rate's going to be higher. The mortgage insurance cost is going to be higher with 3% down than 5%. But that's another alternative. However, if you are at the absolute maximum and you're putting, 3% down on a Fannie Mae loan, or let's say 0% down on a WIDA loan, which is possible, that's our best first-time homebuyer program, and you don't have any extra money, then the only thing you can do is negotiate. So thanks for that question. That's a great question. All right. When we come back from this break, we're going to talk about the difference between a 30-year, a 20-year, and a 15-year, especially relative to refinancing. What are the pros and cons of each of those when we come back?
This is the Accunet Mortgage and Realty Show. The talk and text line, courtesy of Accunet Mortgage. It all ties together. See how we did that? 414-799-1620. We had a good one from the 262. We have Ron from Thiensville. He's on the line. Ron, hang on. We'll try to get you on the show. We have some time for your calls and your texts as well. It's 10:49 at WTMJ.
Don't just find a house. Find your home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, U.S. Representative Glenn Grothman, he's been in politics for more than 2 decades. Where does he think the country is headed? And what are the biggest obstacles facing a very polarized nation? The Wisconsin congressman goes one-on-one with our Mike Spalding. He is the subject of this week's WTMJ Conversations, and it all begins at 11 o'clock this morning. At 10:53 with Brian Wickert, David Wickert, I'm Scott Warrison for Steve. And let's go to the lines here, guys. We have Ron in Thiensville. We have time for you, Ron. Good morning, sir.
Oh, fantastic. Thank you so much. I'll make it quick. I bought a home about 4 years ago, looking to expand the family and buy a new home in the next 90 days or so. My wife and I, both of our information were part of the data breach for Equifax. We haven't made any moves yet, although we have had USAA credit monitoring already established before this all happened. So I guess my question is there anything we should do as far as, freezing our credit or anything to do with our credit in regards to that buying a second house?
Yeah, and given your situation, Ron, here would be my suggestion. One, you should consider Accunet's guaranteed rock-solid pre-approval, and you could get that done tomorrow with David, Chief Millennial Loan Consultant David Wickert. And then once we obtain your credit report, that's good for 120 days. Okay? So I think what I would do if I were in your shoes is get going on the rock-solid pre-approval. And then as soon as we get your credit report, again, which we could do, tomorrow, then I would go ahead and freeze all 6 of your credit files, 3 for your wife and 3 for you. And the recipe book for how to do that is right at Accunet.com in that blog section at the bottom. Then, if you follow those steps to freeze your credit, if we do need to update your credit, prior to closing, it's not that bad anymore to unfreeze your credit. At Equifax and at TransUnion, once you establish your account with each of those credit bureaus, and again, you're going to have one, Ron, and your wife is going to have one at each of the 3. So you're going to end up, unfortunately, with 6 accounts. There's no way around it. But it's not that big a deal to unfreeze your credit. Just a click of the button, or in some cases, with Experian, the only way to do it with them, they're kind of the odd guys out, is you're going to get a PIN number, and then you just provide Accunet with the PIN. And that allows us to get your credit report for a period of time that you designate. So does that help?
Yes, it does. Thank you so much.
Yeah. So if you want to leave your number with Ben, we'll have David give you a call tomorrow and get the ball rolling, if that sounds like a good idea. And by the way, since you're a USAA customer, we beat their closing costs all the time. I just had a client who was shopping us against USAA, and we killed them like we do, with most lenders around the area. So thanks again for calling into the show. Really appreciate it. All right, so with rates as low as they are, there's a big window of opportunity for refinancing, and here's just some interesting numbers. So and by the way, David, what loan lengths can we do at Accunet Mortgage?
Anything from 10 to 30 years.
That's right. So a lot of people don't want to quote start over.
Yeah.
If they're 3 years into their 30-year fixed rate, no problem.
You want that 27-year mortgage?
We can give you any flavor you want. All right, but here are the differences on kind of the big categories. 30-year fixed rate, as David said earlier, 3.99 with 25% equity and all the other right stuff. The APR is 3.99 because the closing costs are nothing. The loan costs are nothing. If you compare that to a 20-year fix, which you can get for a frog hair less in rate, 3.875, so just a little bit less. But because you're paying off the loan 10 years faster, the difference in payment on a $200,000 loan amount is almost $250 a month. Okay, $245. Now, the good news is you will actually save $55,853 of interest if you make the scheduled payments on the 20-year versus the 30-year. So that's what attracts people to it, is I'm going to save all this interest. But the downside is you are committing yourself to that higher payment for the next 2 decades. Mm-hmm. What if you lose your job? What if your wife loses her job, or you're in a car accident and you're on disability? You have now signed up for that higher payment, and you're stuck with it. Go ahead, David.
Whenever someone asks that question, I say you can always pay it faster, but you can't pay it slower.
That's right. You can turn the 30-year into a 20-year by making the higher payment, and then you can go back to the 30. But a lot of people don't have that discipline. The difference, by the way, on a 15-year is a whopping $463 higher payment per month versus the 30-year. But you do get a 3.375 rate. So there's a rate difference, and you will save a ton of money versus the 30-year, $88,000 of interest. So we've got all the flavors for you. All you got to do to find out how much you can save on a refi when rates are this low, click on the blue button at Accunet.com, or give us a call. The phone number's right there. And again, if you're like Ron and you're thinking, hey, I'm going to buy a house in the next 90 days, now's a great time to get started with a rock-solid, guaranteed pre-approval to buy. You did a great job today, Scott. Thanks for filling in. And we'll be back here with another show, same time, next week.
My pleasure, guys. Let's do it again in the not-too-distant future. Belinda Babinick is up next with your headlines.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Scripps Media Incorporated.